Well, it is Tax Tips Week on the Hampton Roadshow. Joining us now is tax expert Melinda Wiedenhoff with Jackson Hewitt Tax Services. Welcome to the show.
Thank you.
We hit the streets for you to get your questions. We're going to start with Delana. We're trying to get Delana's
My tax
question.
problem is that I went to school for 8 years and I have student loans. As a pharmacist, we're obviously making six figures. And I want to know if or if not we're able to file our interest from our student loans on our taxes. And if not, why?
Delana was talking about making six figures, and she wanted to be able to use the interest on her student loans and file it on her taxes. And she wanted to know why she couldn't do that.
Well, there are income limits.
Right.
If you're below certain income limits, you can deduct your student loan interest on the front of the 1040 as an adjustment to income, up to $2,500. But unfortunately, there are limits on it.
I mean, she's a pharmacist, so she went to quite a bit of schooling.
Yes, and they have a lot of loans, and unfortunately, she can't deduct it.
Okay, thank you. At least that helps us as far as the reasoning behind
Yes.
it. All right, let's check in with Fred now.
I live in North Carolina and have worked in Virginia for the last 25 years. On a retirement, I've heard people say that you do not have to pay state income tax if you're employed by public safety, police and fire. And I was just curious if that's accurate or not.
Not in Virginia, but I think he said he was in North Carolina.
North
And there
Carolina.
are subtractions for retirement in North Carolina. So that's a state issue. Federal, it's going to be taxable, but for
Right.
North Carolina, there will be a subtraction for him.
Even though he works in Virginia and lives in North Carolina.
Right, right. But he's going to retire and be in North
Right.
Carolina, so it'll be subject to North Carolina.
That's interesting. Very interesting. All right, I know we've got plenty more questions for you. Let's first talk about filing status. How do you choose the right one for you?
Well, you have to look at several different factors. Whether you're married or not is a big one. And if you're not married, obviously most people think I'm single. But if you are a single parent, you may qualify for head of household, which is going to get you a lower tax rate and more deductions. So you want to look at those different figures. And sometimes everybody automatically says, oh, I'm married, we have to go married filing joint. But it may be in your best interest to go married filing separately, take your income and deductions, and you both end up with a better refund or less tax.
Interesting. The
Which
thing
is
is, how do you figure that out?
You come see me.
'Cause I was going to say, would you be doing your taxes like 3 different ways?
Well, and you know, a lot of times, you know, we can do that, and then our software will split it out and tell you which way is best.
So that will tell you, as
Yes.
far as the tax filer, which way to go.
way is the best way
you
to go.
basically figure it out 3 different ways. Well, here's a question we get a lot. For folks who are single, who don't own a house, they've heard the benefits of itemization, but would you say that it is worth it for them to take the time and effort to do so?
If they don't have mortgage interest and real estate taxes, their standard deduction is going to be more than their itemized deductions, and you want to take whichever is best for you because that's going to be subtracted from your income and lower your tax. So without property, probably not. They're going to want to take the standard deduction.
When does it become worth it to do that, to get all the paperwork out and actually itemize, if you're single and you don't have a house?
If it's more than $5,900 for all those miscellaneous deductions,
Okay.
because that's what you're going to get automatically.
Okay.
So.
Interesting. All right, last question. Explain the EIC and who can claim it.
The Earned Income Tax Credit is a refundable credit that you can get on your tax return if you're within certain income levels and you have children, or even if it's low enough, I don't know the exact figure, under $10,000, you can get it as a single person or married filing joint. And if you have up to 3 children, it can be as much as over $5,000.
Oh, wow.
So
it is
it's a
something to definitely look into
yes,
if
because
you're
it's a
eligible.
refundable credit. You would actually get a check for that amount of money.
Very good. Melinda Wiedenhoff, thank you very
Thank
much
you.
from Jackson Hewitt Tax Services. And I know we're going to have more tax experts throughout the week as we continue to
Yes.
help you put together your taxes here on the Hampton Roadshow. Thanks very much.
You're welcome.